Folks, Wall Street is the most scared, concerned, starting to panic I've seen them in quite some time. And the first topic we're going to talk about in today's video that I want to show you is the signs that Wall Street's starting to panic. And they are definitely the most concerned I've seen them in quite some time, to be quite honest, okay? Second subject we're going to talk about is mass bankruptcies incoming. I have some stuff to show you in today's video that's going to blow your mind, okay? And there's so many bankruptcies coming just in the stock market world, it's astronomical, okay? We're going to talk about home builders. Those stocks popped today. Hilarious. I want to explain that because I think it's a very important subject we discuss in today's video. I want to do a major update on commodities. VIX is starting to brew. We're going to talk about that, right? And we're going to talk about when do I start buying aggressively again in this market. So a lot of topics to discuss. Hope you guys enjoy it as always. Smash a thumbs up if you do. And thank you everybody that subscribed to this channel. Let's get straight into it, okay? So when Wall Street starts dumping their favorite stocks at any price, they're starting to panic. They're starting to get very, very scared, okay? And I know Tesla's thought about as a retail stock. You know, obviously it's one of the most popular retail stocks out there. But let's be very clear. This stock was hijacked in 2020 and became a Wall Street stock. You don't grow to be $1 trillion plus market cap by being just a retail stock. That means Wall Street money came in this, right? And obviously funds bought up Tesla over the years, and as the numbers got better and better, they bought this story, they bought this stock, and it performed tremendous, right? But now Wall Street will dump these shares at just about any price. The stock's now down almost 57% year to date. And Wall Street shows no signs of stopping selling this stock. And even with the report the other day, right? The report comes out, Tesla's cutting production at the Shanghai facility. And Tesla comes out and says that's not true. Wall Street doesn't buy it. Wall Street says, no, we think you guys are cutting production, right? And we're selling you. We're selling you regardless. We're going to sell you at whatever price, right? And without even the market moving down massively, the stock's down another 3% plus today. And that has been one of the Wall Street darlings of the last few years. There's no doubt about it. But right now, Wall Street's so scared at this point in time, they're starting to panic so much that they're like, I don't care, man. If you can give me 174, give me 174 for Tesla. If you can give me 150, give me 150 for Tesla. We'll sell it at any price at this point in time. Salesforce CRM is one of the Wall Street's favorite stocks over the past 10 to 15 years, okay? And they won't stop selling this stock. They won't stop selling it. It hits new low almost every single day, including today, another new low, down another 2% plus here a day. For a Wall Street darling, it doesn't matter what price the stock's at. Wall Street's selling it. This isn't retail. They don't control the Salesforce stock as they don't control Tesla stock anymore at this point in time. And if Wall Street wants to keep dumping these babies, they'll dump them into oblivion. And that's a sign when they're selling their favorite stocks. Like Salesforce is one of the top 10, in my opinion, favorite stocks of Wall Street. And they don't care, man. They're selling the stock at any price right now, okay? Look at this. This is important. Good old Apple. They're even starting to panic around this one. Now, Apple's come back several times this year, right? And basically because Apple reported such great earnings, it brought it back to life, right? It brought it back here, it came back to life here, and it's attempted to come back to life 2 times recently, but ultimately they're trying CPR time and time again on Apple stock, and it's just not working anymore. It's just simply not working anymore. And they continue to sell this one off again here today, nonetheless, right? And something very important is going on with Tesla numbers that's happening on the down low right now, okay? So check out what I'm showing you here, okay? So now analysts have them only growing 0.2% in this current quarter we're in, and less than 3% in the year, right? And in EPS of $2.01. But what's important is you want to track these numbers over time, okay? And keep track of what analysts have because they keep bringing down their numbers for Tesla. And I'll show you that in just a moment. But let's ask ourselves, is Apple really going to grow 3% this year? I don't know about that, okay? I don't know about that. But check this out, okay? So this is a screenshot I took on the 29th of November, not that long ago, a little over a week ago, right? And at that time, analysts had them growing revenue 1.1%, right? Now, just a little over a week later, they're down to 0.2%. So it's just a matter of time, and analysts are going to pull their numbers down to basically the company's going to shrink revenues in this current quarter. See how they keep bringing down numbers? They were expecting 203 just a little over a week ago on the 29th when I took this screenshot. Now analysts are expecting 201. What's it going to be, 2 weeks from now? $1.99, $1.95, $1.85, right? And so they keep bringing down the numbers. And 90 days ago, they were at 212. So they keep bringing down the Apple numbers time and time again. And it's just a matter of time before they bring the 2023 numbers to negative. I think it's just a matter of time, and it's just a question of, are analysts going to do that in the first quarter or the second quarter? And it's a tick situation in regards to Apple, right? So there's a lot of signs that Wall Street's starting to panic here. Now, if you're talking about bankruptcies, there's so many bankruptcies that are going to be upon us here. It's going to be ridiculous, okay? You look at a stock like Carvana. This stock fell another 43% today. 43%. The stock's down 98.4% this year, year to date, okay? It's been an epic fall for Carvana. And a company like this, everybody's convinced this baby's going bankrupt, okay? And to be honest, they're probably right. I mean, I saw a video, I think it was from either last week or the week before, but Carvana was basically letting their whole second shift employees, fired them all. They brought them in all into a room for the second shift, and they're like, basically just let them know that they don't have a job anymore, and they're like kind of, exit out that door essentially, right? And with a company like Carvana, it feels like it's just like how many months until the whole company's under? They're in bankruptcy, right? And it seems like they're definitely going that way, and it's likely going to go that way. But the thing with Carvana is, I know it's a famous company that a lot of people are looking at, but the thing is, this is just one of a massive quantity of companies that are just like Carvana. Open Door. I don't think many people would keep track of this one. It's down to $1.29 a share. It's down another 8.5% here today. This is another company that Wall Street believes is likely going to go bankrupt, right? And so, this could be a situation where they have to, basically cut all their employees. The whole company goes under. You look at a company like Shift Technologies. The stock's down almost 94% year to date now at this point in time. It's down to 23 cents a share, right? People believe Shift is going under, and there will be no more employees for that company, right? You look at a stock like even Affirm. Affirm's getting close to down 90% so far year to date. It's down to $11 stock at this point in time. A company like Affirm, a lot of people couldn't even conceive of this being like a bankruptcy candidate in 2023. But now, you look at a stock like Affirm, this buy it now, pay later company, and I think it's at real risk of potential bankruptcy in 2023, and the market's starting to price that in, right? And when you're starting to fall to these sorts of prices, there's no doubt you're on that trajectory of kind of going there, okay? Peloton. It's everybody's kind of hyped because it's, holiday season right now, so everybody thinks like the husbands are going to buy their wives or buy themselves, I guess, Peloton bikes or whatever it used to be in past years. But at the end of the day, once this holiday season's over, this is going to be another bankruptcy candidate as well. And it's like, do they have a business model there, right? You look at the EV stocks. Have you looked at the EV stocks recently? Oh my gosh, okay? Remember, these are the next Teslas. Look at all these stocks. I mean, oh my gosh, okay? Ride. Workhorse, Ride was the Lordstown Motor, right? Workhorse, Nikola, Lucid, all these babies are falling to like basically penny stock prices now. Ride's down to $1, Workhorse down to $1, Nikola's down to $2, Lucid's down to $8. It feels like Lucid's just a matter of time before that goes under $5, and that's a penny stock, right? And Lucid, they're supposed to, who knows if they ever make a profit, and who knows if they survive long enough to make it to a day where they make a profit, right? Unless the CEO can magically raise a lot more money, which he's talked about, he's going to have to raise money a ton more times, that company's going under over the next year or two, right? And that's the same story for almost all these EV companies. They're going to need a miracle to pull them through, because none of them are profitable. None of them are going to be profitable, I mean, maybe ever, but certainly over the next few years, which means they're going to have to raise tons of capital, and you can't raise capital right now. Or if you do, it's almost impossible, right? So, I mean, what's the chances those ones even make it, right? So there's a high probability all those babies go under, right? Remember Virgin Galactic? Space? Oh, yeah, they're going to give everybody space rides to outer space, and you're going to pay like, I don't know, what was it, $500,000, $250,000, or whatever it was to go on a ride to outer space or whatever, right? The stock's down 91% plus now at this point in time, and this is one that they're going to, there's going to be real questions about bankruptcy in 2023 for this company. The way they're blowing through money, and they're not expected to make profits anytime soon, if ever, right? These are sorts of stories, and look at that stock again today. It's down another 10.8%, right? Or is it just a matter of time before it's at $1? It's definitely a possibility, right? In this sort of environment, right? And I'll bring it to you back like this, right? The Chef. It's a company that's at a 50-50 of going bankrupt now, right? It's a food company. A flip and flapjack and food company that had $132 million of cash on hand, right? If a company like that is now at a jeopardy of a 50-50 going bankrupt in 2023, what do you think about all these other companies that employ thousands and sometimes tens of thousands of employees that have very questionable business models and are showing basically no prospects of turning their businesses around. What do you think is going to happen to those companies, okay? So we're likely going to see mass, and I mean absolute mass bankruptcies in 2023 from just company after company and domino after domino. And when you start to feel those bankruptcies, it's going to create some sort of systemic risk because a lot of those companies owe people a lot of money, creditors, people that loan these companies money, okay? And maybe even some institutions or hedge funds that might be leveraged in some of these. And where does this start to come in with systemic risk? We have watched in 2022 what's happened in the crypto space with all these companies that have gone under, all these funds that have gone under. We haven't seen that in the stock market yet, and that's the scariest thing. But we can definitely start to see that in 2023, right? And so this is an unbelievable kind of situation that's just brewing here, and it's going to get worse before it gets better, right? You look at the housing stocks, hilarious. These stocks popped huge today, right? You look at Toll Brothers up 7.7%, and a lot of people are trying to figure out how do these stocks make a move up like that today, right? Okay, so I'll break it to you down like this because I think this is extremely important for every single person watching this video to understand this because I did a lot of thinking around this, right? So we know so much of trading is done through obviously algorithms nowadays. It has nothing to do with human input. It's simply machines buying and selling these stocks, right? So for a stock like Toll Brothers, right? They come in, they report pretty much the best quarter they ever have in terms of revenues, in terms of net income, in terms of just about every metric, right? Incredible, right? Now, also their backlog's down 60%. Not their backlog, excuse me. Their orders are down 60%, right? But their backlog hasn't completely dried up yet. So the algorithms can't forecast a year from now or 2 years from now where, the real estate industry is going to be. And the fact that Toll Brothers, backlog is going to dry up massively over this next year, and that going into 2024 their backlog is going to be like a joke, especially compared to where it's at right now. Okay, the algorithms can't factor things like that in. The algorithms are looking at these kind of headline data of net income's a record, revenue's a record, it's coming at this number, and it'll also factoring things in like valuation, low PE, things like that, right? And so the machines are simply going to buy that stock, right? But at the end of the day, a stock like that can't thrive because we know the fate of Toll Brothers and all the home builders is not in a good place for the next several years. So what's going to end up happening is what's kind of happened with those stocks, that every time they pop and the machines and the algorithms make those stocks pop, then very shortly after, the actual humans go in and they say, thank you for that machine. They go ahead and sell the stock essentially, right? And that's why the stock can't have a permanent pop because every single time the humans come behind it and then start selling. And you'll likely see that with the home builders here over the next month or two. All those pops will erode. The humans will come in and sell. It's just what happens, okay? And so that happens in stocks. It's a silly world we're in right now. It's a silly stock market, but it is what it is, and it's part of the process, okay? Now, commodities. We got a lot of things going on here with commodities. Crude down again today, WTI 2.5% again here today, gets hit again, right? WTI is now down 4.2% year to date in a year that was supposed to be like the greatest year for oil, and just everything went the right way. But now the further and further we're getting into recession fears, the more and more trouble WTI will have. Bottom line, the more people are concerned about we're not having a soft landing, we're going to have a hard landing or crash landing, the more concerns around that, the more you will see oil continue to fall and fall and fall, okay? Oats, now down 51% year to date. These babies have tanked. And I mean tanked, especially from where they were at in the spring. If there's some hope for a stock like Oatly, right, it's seeing something like this, where the price of oats just continue to collapse. That's at least some hope there. But at the end of the day, you can't get too excited about any of those babies, right? If you look at the commodities index in general, this baby's down massively from the peak back in the summer. And so this is great for inflation numbers. And this is why I say, inflation's not even going to be the concern in 2023. Everybody's talked about inflation non-stop in 2022. It's been almost the only subject that's, taken away everybody's attention, whether it's the Fed, everybody. I can tell you, inflation's not going to be the subject of 2023. The subject of 2023 will be recession. It will be how bad does the economy get? How bad does real estate get? That will be the subject of 2023. We will have a shift from inflation to economy. Okay, and that's what you'll see kind of play out there, and everything's just lining up the right way in terms of the inflation. But like I said, it's like we're going to go from this inflationary theme of holding back stocks to then the recessionary theme of holding back stocks and how bad are things going to get, right? Natural gas had a great day today, up 8%. But let's be very clear about natural gas. The next 75 days is natural gas's Super Bowl. So at the end of the day, like, natural gas has this little kind of window to try to, like, let's call it pump. Okay. But then after that, like, the bull case around this baby erodes, just like what happened in oil. Oil, it was like, oh, everybody's going to be traveling this summer. It's so great for oil, plus all the other things. And as soon as summer started to tick on, right, we saw oil just continue to fall and fall and fall. Don't be surprised if the same exact thing happens with natural gas, okay? We got so much flip and flapjack in natural gas in the United States, we don't know what to do with it all, okay? We could burn that stuff for pretty much eternity, and we still have some, okay? The VIX is starting to pop here. This baby's up almost 10% in the past 5 days. Everybody's talking about a 40 to 50, VIX going to 40 to 50, okay? Here's the deal. If we're going to get a VIX like that, I'm telling you, we're going to need something epic to happen, okay? We're going to need like a Blackstone, situation gets so bad that they potentially go under, or maybe problems at BlackRock, maybe even like, if something happened there, or something happening with a massive hedge fund. We need something colossal, right? We need, if you're talking about getting the VIX to that 40 to 50 level, you're going to need those sorts of situations like we saw in the crypto space this year in 2022. You need some of those stories to start to happen in the stock market space. Over-leveraged funds that start to have to face liquidation problems, right, and go under. Companies that start to go under, right, were big names, and the creditors go under, right, and then that creates some sort of systemic problems. So I wouldn't say it's impossible for the VIX to go to that 40 to 50 level, but you're going to need epicness to happen, okay? You don't get VIX 40 to 50 unless you get an epic, like, oh my gosh, can you believe what just happened? It shakes up the market so bad that it creates systemic problems, and it's like dominoes falling the wrong way, okay? Now, if that happens, you will see VIX go to 40 to 50, but that's what it's going to take to get that baby up to 40 to 50. I think it's important everybody understands that, okay? Now, let's talk about me in terms of like, when do I get out there and start aggressively buying stocks again, right? Because I've kind of been like chilling a little bit here, right? And I did buy some Target shares, but it was like $1,700 worth. I'm kind of in a little chill mode at the moment, okay? So here's kind of me personally and kind of what I'm up to. The first thing is I'm doing a lot of work on several different companies right now. Some of those companies include stocks like AMD, stocks like Adobe, as well as a few others that I don't even really want to talk about yet. And so I'm doing a lot of digging on companies like that. And, I listened to the latest AMD investor presentation from yesterday, which was very tech driven, and that was just like blow your mind, like holy smokes, man, like your mind's fried after one of those presentations that's so tech heavy, and what AMD's up to and what they're doing with their actual underlying products and things like that. So I'm in mass kind of research mode right now, and kind of like getting back to the blueprint. One of the things in the blueprint is I always usually chill in December. It's been very common for me whenever I've been like kind of in the blueprint, right? And so that's exactly what I'm doing right now. I'm kind of using this as a chill back time, and I'll get back out there in the first quarter of 2023. But what I'm trying to figure out right now is I'm trying to figure out who's my full group of stocks for 2023, right? Likely Meta is going to continue to be in there. Likely Google will be in there. Likely Amazon will be in there. High probability AMD will be in there. High probability Adobe will be in there. High probability maybe Intuit will be in there, and a few other companies I'm looking into right now, okay? And so, but I'm trying to figure out kind of the order of like, where does capital go first versus second versus third versus fourth, like where are my best opportunities, right? And so that's what I'm doing a lot of work on right now. So I'm not in a rush to say I've got to go, buy everything in sight right now, because I understand I got time on my side. I am very of the understanding that the Fed's going to keep rates at a very elevated level for quite a while here. I'm very of the understanding that real estate has a long way to go, right? In terms of the downside. And I'm very understanding that the market's going to continue to be in a tough place for quite a while here. And so there's really no need to rush back out there and say, I got to go all in right today or something like that, right? And so I'm just trying to be very strategic in everything I do, kind of moving forward here. And as I deploy capital, I'm doing it in a very intelligent way into stocks that are in very undervalued territories, right? Which there's starting to be so many of them open up that we haven't seen an opportunity like this in years, to be quite frank. March of 2020 was not that opportunity. It was too fast. It was down and was straight up. We haven't seen a real opportunity like this this is better than December 2018. This is better than December 2018. I'll be honest, we haven't seen an opportunity like this really since the great financial crisis, in kind of those years coming out of that, where you got an elongated period to add countless of great quality companies that have tremendous long-term business models, proven business models, profitability, margins, and are going to get a 12 to maybe even 24-month window, if we got that, to add the most high-quality companies at heavily discounts, right? And so that's kind of what I'm looking at, getting back out there more aggressively in the first quarter of 2023. And I'm just trying to, right now, I'm just formulating what are all the stocks I want to buy, what's the class of 2023, and, what's the order of those stocks in terms of importance, right? And obviously, in terms of recent importance, it's been obviously Meta, right? You saw me buy Meta insanely aggressively. I haven't bought a stock that aggressively in such a short period of time, in quite some time, right? Meta, I mean, I was at, when it comes to Meta, I was buying, one day, I think alone, I bought what was it, $77,000 when that stock was I don't know if it was under $100 or it was $90 or $80 or something like that. So now I'm trying to figure out, okay, I got a good size Meta position. Do I continue to build out Meta bigger? If I do, how much bigger? Versus some of these other opportunities in the market, because they're just one of many companies. Tesla is a high probability I'm going to start buying Tesla again in 2023. But the question is, how aggressively am I going to add Tesla, right? Is it going to be like, in when do I start really adding aggressively Tesla? Is it when it's under 150? Is it when it's under 140, under 160? That's another thing I have to kind of figure out here with a stock like Tesla also. So many various factors at play here. And there's a lot of opportunities, and there's going to continue to be a lot of opportunities for the next probably year, to be honest. And if you're a long-term buyer, you got to understand, you don't get these opportunities very often. And the last time we truly had an elongated period where you got to buy great companies at significant discounts was the great financial crisis. And that was really 2008 through 2010. In that kind of cycle, you got so many stocks at so many discounts, and so many great buying opportunities out there. That's the last time we had one of those, man. And we got one of those in front of us, and we're going to have one of those in front of us for a bit here. So that's definitely very welcoming. Let's just call it that, okay? Hope you guys enjoyed today's video. As always, I appreciate everybody joining me. Thank you for being subscribed. Much love, and talk to you later. Peace.